In this video, I'll be going through Work Together, problem 15-2, and this is on page 445 of your Century 21 Accounting Advanced Textbook, edition 11 by Gilbertson and Lehman. So credit to them. We are preparing budgets for selling expenses, administrative expenses, and other expenses, and preparing a budgeted income statement. So the problem says, use the information given in the budgets prepared in Work Together 15-1, which is here on our workbook. Additional information is given below. So here's all of our information, right? We are calculating each quarter's amount by multiplying the percentage here times that quarter's net sales, which we have back on 15-1. Okay? When a dollar amount is given, the total amount should be divided equally among the 4 quarters. Okay, so this first one I calculated as a round function because we want to get it to be that nice even to the nearest tens number. Okay, so we round 2.5%, which is what our advertising expense is supposed to be, times our sales for that quarter, which is in cell C13 right here, right? Net sales, okay? So we should be able to, as long as this is built right, we should be able to carry this across and get that same amount here, which we did, that the book had for us. So delivery expense is this function here. It's almost the same. So equals round, parentheses, and then it's 5% times the same cell for the sales for first quarter, okay, and then comma, and the number of places is -1, parentheses, so 14,180, and if we carry that across, we got the same amount, so that's a good check that we're on the right track here. Depreciation expense for delivery equipment, it says it's $8,000 for the year, so that's $2,000 per quarter. Okay, and warehouse equipment, $5,000 for the year, so $1,250 per quarter. Miscellaneous expense sales, this is 4% of net sales. So if we copy this function, Control C, Enter, and we come down here and paste it in, and we just change this percentage to 4%. It should work, I think. Did it? 16,020, yep. And if we don't like what happened with our formatting, we can just format Painter what we like and change it. That works. Okay. And now salary expense for sales. That one is 6%, so we'll just copy this function and we'll paste it here. Formula only, we learned from our mistake, and make this a 6% and carry it across. And then this last one we'll paste again, and then it's 2%. So we change our percentage, and we'll carry it across. So here's our sum formula. We'll go ahead and carry that one across, and we'll total up our annual budget here by adding up the 4 quarters. And do we want to autofill? I think we do. So there we go. We'll just fix that formatting so it looks good, right? I wonder why we didn't get that bottom line. Now we've got it. All right, next part. Now it's time to do the administrative expenses budget. So most of these are dollar amounts, so we'll go ahead and just do this the easy way. We'll put them in here. $4,000 for depreciation expense, office equipment, $6,000 for insurance, $3,000 for miscellaneous. Payroll taxes is a weird one, 12% of total salaries. We'll hold off on that one for a second. Rent expense is $24,000. Salary expense administrative is $20,000. Supplies expense administrative is $8,000. So let's go ahead and split this 4,000 divided by 4 is going to be 1,000 each quarter. 6,000 divided by 4 is 1,500 per quarter. 3,000 divided by 4 is 750. Okay, 24,000 divided by 4 is 6,000. 20,000 divided by 4 is 5,000. And supplies expense, 8,000 divided by 4 is 2,000. Okay, now uncollectible accounts expense is 0.5% of our net sales again. So we'll just take one of these formulas. We'll do a check on one of these first, right? So we'll copy our formula so that we get that round formula and get it right. And we'll paste it in as a formula so it doesn't mess up our formatting. And then we'll change the 6% from it to a 0.5%. Okay, 14, 20, and if you get 2,000 here, we did, so we've got it right. We can do our sum formula across to make sure that we get our total. Okay, and then for utilities expense, 2.5%. So we'll just copy it all the way up here. Okay, and we'll come down here. We'll paste our formula only. And then we'll change it to 2.5%. So we get 7,090 or 10,010 was correct that the book gave us. We'll add them across. Okay. And now we're down to just this pesky payroll tax expense that's 12% of total salaries. So for salaries, we have salary expense sales and we have salary expense administrative. So our formula needs to be equals, we've got to round it again. And I'm going to do a second parentheses here because I've got to add them together. Salary expense sales plus salary expense administrative. We'll close that off, so order of operations, it's added first, times 12%, and then comma, number of places to the -1 so that we get it rounded to the tens place, and enter. 2640, which is, if we get 3480 on the third quarter, it'll be a check. So we did it right. That was a little trickier, but not too bad. We'll total them up. And now we will total for each of the quarters, and we will add up the entire year, or 123,200 total administrative expenses. Now we've got to do our other revenue and expense budget. So we're looking for interest expense, and the book tells us interest expense is estimated to be $25.20. So then we'll just put $25.20 here, and then equals this amount divided by 4. 630. And if we make this an absolute reference, we should be able to pull it across. And we can. All right, now we're going to do 15-2 continued. Our last part is the budgeted income statement. So a lot of these items on our income statement, it tells you what schedule we just made them on, right? So net sales from Schedule 1. We've got to go find our $283,500 for quarter 1. So let's find our Schedule 1, and here it is. Right, 283.5. So we'll go ahead and pull that across. Now let's find our purchases from Schedule 2. 135,100. So we'll find it from Schedule 2, 135, 100, enter, and we will pull those amounts across, and we will find our selling expenses from Schedule 3, 58,540, or equals, let's see, Schedule 3, 58,540, enter. And so we'll drag that one across. And our administrative expenses, and those were 27,400 first quarter. And let's see, Schedule 5, other expenses, so equals this one. Interest expense is all we had in the other. And so that's a lot of them, but now we've got a little bit of work to do. Like we've got our beginning inventory, 26,600. So this 26,600 would be our unit cost, which problem 1 said that it was $7. So it's $7 times, we don't have to put a dollar sign in here, just 7, times our beginning inventory, which was here, 3,800. So that's our 26,600, right? And now our ending inventory would be the $7 times our ending inventory, 4,200, is 29,400. So ending inventory here becomes beginning inventory there. And so we just got to keep finding our ending inventories. So it'd be $7 times the next ending inventory, and so on. So we'll just carry those in. Total merchandise available for sale is just a simple addition. Cost of merchandise sold is just merchandise available minus ending inventory. And then gross profit is just your net sales minus your cost of merchandise sold. So we'll just pull those formulas over. Okay, now we've got total operating expenses. This should just add up your selling and administrative expenses, and it does. And then your income from operations is a subtraction of gross profit minus your operating expenses. So we'll pull those across. We've got to subtract our other expenses, right, from your income from operations to get your net income before federal income tax. And now we're down to the federal income tax expense. So we have to find our federal income tax. And according to this problem, it says federal income taxes are calculated as 21% of net income before federal income tax. So this should be equals 0.21, equals 0.21 times net income before federal income taxes, and might have needed to be a round function. We'll fix that. So we'll go equals round that number, comma, number of places, -1, so we get it to the nearest 10, because in budgets we like nice round numbers. Okay, now it looks right. So net income after federal income tax is just subtract your federal income tax expense from your net income before federal income tax, and there we go. So now our annual budget, we should just, a lot of this we can add up, right? With a few exceptions, like your inventory amounts. We will not autofill. We will, I'll just grab them real quick and pause, and then you can see the answer. So these are either just the same function before subtracting or adding things from above, or your beginning inventory is your first quarter inventory, and your ending inventory is your fourth quarter ending inventory. Otherwise, that's it.